Today is Monday, December the 5th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the grains today, Mark, what are your expectations for Friday's USDA report?
USDA reports in December historically do not generate a lot of price volatility. Friday's report will not feature any production changes here to the U.S. crops. The next production report here for the U.S. is the final production figures in January. Last year in December, the USDA made no changes to either the corn or soybean balance sheets, while in wheat, they made just a modest upward revision to ending stocks. In fact, in corn, we have not seen any changes during the December WASDE report in the past 3 years. I don't think that's going to be the case this year. Corn exports have been running at a pace well below what we need to see them at in order to hit the USDA forecast. Since the last November report, the Black Sea grain deal has been extended for another 120 days. So, I would expect this 50 to 100 million bushel cut in exports just to carry through to ending stocks as we see no other changes in the demand side of the equation. That would lift corn ending stocks to just over 1.2 billion bushels. I think a similar argument could be made in soybeans as well. Exports have been running okay, but there does appear to be a market sentiment that the Brazilian soybean crop is just going to beat mammoth here this winter. So I think a 25 to 50 million bushel export cut there is also in the cards on Friday. Couple that with China, their import demand from the U.S. has not been that strong. Expect no changes in the wheat. On the foreign production, I think we're likely to see no major changes just yet from South America, perhaps a little bit early for that. However, if I had to guess right now, I'd lean a little bit higher in Brazil in both corn and soybeans, and lower in Argentina across the board, wheat, corn, and soybeans. I'm looking for a little bit of a production cut to the Ukraine corn and probably an increase on the Russian wheat.
Staying with the corn, Mark, corn prices broke out of their trading range to the downside last week. Do you expect this trend to continue?
Yeah, I do. I think the path of least resistance right now in the corn is still to the downside. As long as corn is being offered out of the Ukraine at such a steep discount to U.S. supplies, and China appears to be looking to Brazil for any corn imports that they may have, I think it's just hard to build a bullish argument. Demand in corn for the production of ethanol is routine, really not enough, I think, to move the needle at all in the USDA balance sheet. I don't think the USDA is going to change their feed usage number this month. Probably wait till the January report. We'll also get the December 1st stocks figures. Money managers, they've been long corn now for 2.5 years, and it's my guess that they're just going to continue to shed a little bit of market the length right up into the year end. I wouldn't be surprised to see spot corn prices drift down, maybe down to that 6.15 level by early part of January. And of course, the biggest risk to this lower price argument simply is war headlines out of Ukraine, Russia, anything that could disrupt this flow of corn, or South American weather. Right now, conditions in Argentina are quite dry. There seems to be some better prospects for rain looking out the next 10 days to 2 weeks. But for now, that's still in the forecast, and not a whole lot has fallen.
Mark, you mentioned the money managers in the corn market. What's the large speculative trader doing in the soybean complex right now?
On the soybean complex, too, like corn, they've been long across the board, the entire soy complex now, soybeans, soybean oil, and meal, for just over a year. Recently, the long position in soybean oil, that swelled to over 105,000 contracts. So that's the largest position that we've seen there in nearly 2 years. Late last week, we witnessed some aggressive speculative selling in the soybean oil, and that was likely triggered by disappointing EPA mandates on biofuel consumption. So the speculative selling happened after the Tuesday reporting deadline for the CFTC Commitment of Traders report. So But I think there was some significant technical damage done on the charts. In January bean oil, that plunged both below its 50 and 100-day moving averages. So I see some key technical support levels still below the market. I think we could challenge the 60-cent level that was a low back in September of this year. And like corn, I think just the entire soybean complex is vulnerable to some speculative selling pressures between now and year end.
Alan, turning to the financial markets and starting with the greenback, what will the U.S. dollar take out the June 27th lows?
Yes, I think that it will. In fact, it was just last week that we took out the August lows. And of course, then those lows on June 27th coming in at 103.31. So interest rate differential expectations in the last couple of months have turned against the dollar. This is a situation that has persisted for, of course, a while, and I think will continue. So I believe the dollar will probably work lower, and this is still, I think, very much a minority view. Most analysts are still thinking higher prices for the dollar, but that's not what I'm seeing. So look for those June lows to be taken out. Also thinking that the Fed will probably only raise rates by 50 basis points at the December 14th meeting, not 75 basis points. So nothing has really changed. The dollar index is likely headed for more pressure.
Yeah, here we are toward the end of the year. A few more economic reports to see prior to year end. We have a couple this week. Which ones could have the most impact on the markets, Alan?
Well, first of all, we'll have consumer credit for October coming out on Wednesday, and the median guess is for a 27.3 billion increase. I'm thinking it will probably be higher than that, as consumers are likely to be using their credit cards a bit more. But probably the most important report is the November Producer Price Index on Friday. That's expected to be up 0.2%. That would be on a monthly basis, same as in the previous month, and 7.2% annualized. And the annualized rate would be compared to the 8% annualized last month. So if I had to guess, and I think I will, I think the numbers will come in softer than the median estimates.
Finally, Alan, looking at the stock market here as we approach year end, what's the near-term outlook for stock index futures?
Well, first of all, today we had a media report indicating that the Fed might be a bit more hawkish for longer. That seems to be a little bit inconsistent with what has been said in the last couple of weeks. So that's why we're down today in the indices. Overall, those stock index futures have held up on bearish news. So I would expect a sideways trade in advance of the December 14th policy meeting, and then higher prices once that meeting is out of the way.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.